Good morning. It's the peak 92.9, and the Tom Stone is here.
92.9. That takes a little bit of a.
Hard for me to say that. I have to look over there. Yes, it's 92.9.
92.9.
And welcome. Nice to
Thank
see
you.
And Brandon is here as well.
Brandon Hicken joined me.
Yeah.
Morning, everybody.
We're going to talk about. Well, first, how's everything? Your family well and.
Yeah,
Big
fantastic.
Scheduled.
I've been asked that question at least twice a week. Hey, you got any big trips scheduled?
Mm-hmm.
And my answer is the same every time. Do you see where I live? During the summertime, I'm staying here. Okay. In the winter, I still like the winter, but I'm going to go to a beach vacation in the winter. Okay. But man, Utah, I'm talking certainly our valley, but Utah specifically. My goodness, I can go from the Red Rocks to I guess clear up into Wyoming and such at the Tetons. So I like staying right around here.
I can go to the traffic jam in Midway.
You can do the traffic jam in Midway?
Just anytime I want.
It's a little different one than the traffic jam here in Heber is obviously the pass-through traffic of, I think our traffic count's at 1.1 million now a day. I'm not sure if that's accurate, but it's something like that.
Wow.
And then, but the ones in Midway are the rubberneckers or the people that are like turning left and turning right. I think it's a 5 mile an hour one. Right. So what's over here? Well, let's look over there. It's like, hey, I'm trying to get through.
Bless their heart, they're spending money. So.
And that's right.
Okay.
That's right.
You're going to talk about, we've been talking to police, we've been talking to sheriff,
yeah.
We're talking to first responders. Today, you're actually going to talk about yourself.
We're talking about Guild, yeah.
A little more.
But before we do that, Brandon, we have spent a lot of time talking about our first responders. Tell us why. What are we doing? Why are we doing that?
The big thing is we just want to say thanks. They do so much for this community. They do so much behind the scenes. They do so much without a whole lot of recognition. And we just wanted to kind of shine a light on that and let them know that they are appreciated here in the Valley. Each one of them, does their part. And, too many times if they're needed, it's not the best situation in the world.
Yeah. When they come, you're like, I don't want you here, but boy, am I glad you arrived.
Yeah. And so, so many good people, so many good friends of mine that are in there. And over the years, I've had I guess I've been lucky enough to really work side by side with a lot of them. And we just wanted to say thank you from Guild Mortgage to all the first responders, all the educators, everybody out there that does so much for.
May I say how impressed I was with the sheriff and undersheriff?
Yes.
We're just so blessed to have them.
Well, and again, we say all the things, they're there for you, but the intelligence level, to me, both emotional and, educationally and other trained. Yeah, no question about it.
Well, and just like, the situation where if they show up at your house, it's usually not, they're there to help you out usually. Too many times if they show up in the newspaper, if they're on the radio, it's for something that is a tough experience, something like that. But it was great to get them in here and just have a positive atmosphere where you could really see who they are and listen to them talk.
Also, we're hitting fire season.
And
it's all around us.
Yeah, it may not be when we had our fire chief in and a few other people like that. They may be too busy to be on the radio for a little bit. I hope not, but we caught them at a good time. And by the way, we're going to have them back. We're going to have different experiences. In fact, most of them, I think all of them, but most of them said something like, man, I have like 10 more stories to tell. Cam Kohler said, let's do it again. And he's got some search and rescue.
They're definitely a group that comes with a lot of stories and a lot of good tales to tell.
And just so you know, he said educators. We haven't had the educators on as of recent because, very politely, I was turned down because they were in school.
Other things going on. They were educating.
They said, hey, Tom, I'd love to come, but can we do it when school's out? So that's our next thing is to invite some of these educators who have put their heart and soul into our kids. So at the end of the day, that's our backbone of the society. Yeah. And I've been taught, I've been told, and I've read the thing that changes people, that changes community and society is gratitude. We're naturally tuned into complaining. That's when, just it's easy. It's easy to complain. It's easy to be negative. It's easy to say, oh, and when we share and show and experience and say gratitude in sincerity, everything changes. Even a tough situation, hey, that really bothered me, but I'm sure grateful about this part of it. So with that said, that's what we've been taught, that we've been shown. And just so you know, at Guild Mortgage, that is taught. It's an interesting thing to say. When we go to our conferences, there's a minimum of half of the participants who speak, and it's usually the loan officers that get up on stage we have big conferences every year, and they just say, I am so grateful for what I've been given. I'm so grateful I get to be a part of this industry. I'm so grateful for what Guild's done for me. I'm so grateful I get to have the clients I do. And with that, I share this, and it's always something in that. So it's I'm surrounded by that kind of thing. My mom literally, if you go and say, how's your day? She'll say literally, isn't this the most beautiful day? I mean, did you see that little bird over there? And the sunshine and the blue sky. And my mom lost my dad, a year ago. Mm-hmm. And she could be complaining. She's not. She's just so pleasant to be around. So all of that is like, man, that's how we should be. Mm-hmm. Now, obviously there's issues, questions, and concerns that we need to work through and work on, but there's ways to do it.
Yeah.
In a teamwork thing. So yes, that is why we've spent time and will continue to spend time on our half hour saying, hey, you know what? Let's not always talk about us. Let's talk about everyone.
Yep.
Not just one.
Talk about our friends here in the community.
Yeah,
absolutely.
Let's do that. The other thing that I do want to share that is down the road of us and Guild Mortgage, but honestly, it's not really about us, because the only way we actually succeed is if we're helping somebody.
Yeah.
Is if we give them something that they want, that they need. And the flex payment is something that is proprietary to Guild Mortgage. And here's the secret potion. You ready? The flex mortgage found at Guild Mortgage, you never make a payment. There you go. That's the punchline. Huh? That is the punchline. Yeah, no mortgage payments. None.
The flex payment.
It's flex for a lot of reasons. One is you don't make a payment.
Another name for that.
He's fishing right now.
he knows what's going on.
The reverse mortgage product is what we're chatting about. And so you need to be a minimum of 55 years old for a particular product. 62 is the more general. So when you're 62, you can start the conversation with saying, hey, wait a minute here. I'm looking at or thinking about retirement. What do I have as my assets, opportunities to give my golden years? At the end of the day, how are your golden years doing? How is it? Some are going to have different answers, right? Mine's fantastic. Some are saying, man, it's tight, especially with inflation through COVID.
It's getting tighter for everyone.
Yeah, and that's what you're seeing. It's getting tighter. People have worked hard. They've had their retirement planned, and only to find out that it doesn't go as far as they thought it would.
Well, what I found is my friends who are in retirement, they retired in 2010, 2005, even 2019. I have a friend that retired at 2019. And the mentality was a 2019 mentality, saying, okay, so here's how much money I have, here's my debts, here's my budget, and you plan according to a 2019 budget. You have some, annual increases that come from Social Security and some other variables, so I'm sure it will keep up. That's what it's for, living allowances or whatever they call them, I can't remember now. They don't, and they didn't. And my friend specifically who retired in 2019 is saying, oh my goodness, I've burned through some of my monies I didn't realize because life has just gotten so much more expensive.
I saw an article yesterday that home improvement or home
remodeling and such.
Remodeling is costing twice as much.
Oh yeah.
As it ever did
before. Yeah.
And your insurance on your home is costing twice as much.
My home insurance, just and by the way, we do home insurance on all of our clients, so we see it constantly. It's a minimum since, let's just use 2019, so pre-COVID. It's a minimum of tripled home insurance. And that's a result of some of the national disasters that have happened with floods and fires. So yeah, my insurance was something in the hundreds of dollars. Now it's in the thousands of dollars for insurance. Yeah, for sure. And then property taxes, of course, for all the variables that come into that, that's, doubled probably in the last 5+ years,
Okay, we have all of these negatives. What's the positive?
that you get money. How much? It's a calculation depending on your age, your home appraised value, and current interest rates. Usually in the neighborhood, just so you know, it's usually somewhere between 250 and 500,000. Now, I do have a jumbo product. There's always an exception to everything I say, by the way. But generally speaking, it's 300 to 500,000. That's usually the number that we play with.
That's based on how much you owe on the house, right? Or how
Well,
much you don't owe on the house.
Yeah, so if I can give you $350,000, it could be either of those, Bob. It could be, hey, my house is owned free and clear. I say, great. Here's a line of credit of $350,000. Use it whenever you want it. Use as much or as little as you want, whenever you want. The other part is, hey, Tom, I owe $300,000 on my house. I'm 70 years old. I didn't realize I'd be in this predicament or situation, or here's my circumstances. What can I do? And I can do a $350,000 loan on that property. I'll pay off your $300,000 worth of debt and give you another $50,000 with no monthly payments. I'm letting that sink in. That's the key right there. No monthly payments.
Okay, but the negative that you're paying interest on that money at some point.
So you used words negative. So does a loan have interest on it? Yes, any loan you have, no matter what loan you have, has some interest accrued. But you just said pay interest because you're not paying a payment.
Well, you're accruing interest on that one.
I'm very careful to make sure we understand this. So when people think about a payment and they think about interest, they think about it coming out of their checking account. They think about it coming out of their portfolio. They have to make that as a part of their budget. In this particular circumstance, your house is paying it, your equity. And what's cool about the equity making the payment is that this is something that just happened. So the negative experience we talked about with inflation, where we say, boy, golly, our taxes went up and our insurance went up and everything went up. Well, so did your house value or your house equity. But your house equity, you get to look at it and say, hey, my house went up $100,000 or $500,000 or $50 or whatever it is. Well, that's neat. And it does nothing for you unless you tap into it. In this situation, you're tapping into your equity, which was something that increased. You can't do anything about it. If you have a house that's paid for, it doesn't pay you anything. Your equity is worth nothing to you until you sell it. So in this case, you can say, yes, I can get a loan on it. So someone could go, hey, I'll go down to the credit union and get me a home equity line of credit. You can do that too. And you have this line of credit that's accruing interest, just like you said, but you pay the interest out of your checking account. This flex mortgage, you don't pay that. Your house does. And that's why yes, you're right. There is interest accruing. So it is a loan. It is a loan. Now, here's the other part about it being a loan. And you said, quote, negative. Well, the cool thing about this is if I give you $350,000, just as an example, $300,000 to $500,000, you don't pay any income tax on that. You can get some money and you don't pay any income tax. So if you said, hey, I'm going to pull money out of my stocks or bonds, there's a high probability that you're going to have to pay some income tax on that.
And a lot of income tax.
Or if you went and said, hey, I need to get a job because I'm not able to afford life right now. So you're going to go down to Walmart and get a job as a greeter, which is a great job, by the way. You're going to pay income tax on that money. This reverse mortgage, you do not pay income tax. This is just, it's your equity that you've first of all, you've paid off because you did buy that house. But then there's an additional, for many of you, there's, $1 million plus. That's just happened because you own a house. But it can't pay you back. So this loan, yes, this loan, but I asked my wife, I said, what is the definition of debt? And she had said, well, it's when you have something you have to pay back. I said, that's right. So if you don't have to pay it back, is it debt? And she said, well, yes. And I said, then it doesn't fit your definition. She said, well, then it's debt. And I go, not according to your definition. So it's not debt.
Well, somewhere along the way, it has to be paid back.
So what happens is, yes, if you borrow $350,000 and it accrues interest, and at some point when your home was no longer your primary residence, so that's the kicker there. If someone says, hey, I'm going to You can't rent this thing out. You can't say I'm going to do reverse mortgage / flex mortgage and rent it out. You can't do that. It has to be your primary residence. So if you say I'm going to not have this be my primary residence, or you get to a stage in life where you're into some sort of a assisted living situation or pass away, then at that point, yeah, you say, okay, what is the loan balance? The $350,000, I keep using it as an example, plus interest, it's now, this much money, and that becomes your payoff. And people say, well, what if it goes upside down? Well, the cool thing about a reverse mortgage / flex mortgage is you can't. They won't allow you to go upside down. Even if the loan balance does, you can't. They don't allow it. They allow up to 95% of the value. Now, with that said also, we loan usually 40 to 50% of the value of the home with a 4% annual increase, which is a basic inflationary rate they use. If that just alone if we just increase at 4% a year, which obviously we've increased drastically more than that over time, but if it's just 4%, you'll maintain that same equity position. So if you have $1 million home and I give you $350,000, that loan balance grows to $400,000 or $500,000, $600,000 in something years. That $1 million home is not even worth $1.5 million, $1.6 million, $1.2 million. Just do the math. If you just said there's no way, just do 4% a year compounded for 10 years. You're going to be astounded at what your home value is going to be. And again, just so you know, in Utah since 1993, home values have averaged an increase of 18% per year. It's gone up 596%. So again, there's this equity piece. In fact, they say that seniors, and I think that's an age 62 years and older, have an average of almost $3 trillion of equity in their homes. So there's $3 trillion sitting there doing nothing that people are saying, well, at least my house is paid off, or at least I have some equity. And I say, sorry, a primary residence is not an equitable asset. It does not pay you anything. In fact, when you sit down and say, what is my net worth, they usually don't put your primary residence into it. Because if you sell your primary residence, you have to get a new one. So the only way to access that equity is by a flex mortgage. Certainly, yes, a home equity line of credit, but you pay money for that. That's not the point. The point is in your golden years is to have that money to go have the freedom to do what you wanted to do.
Has this program been around for a while, or is it something new that's hitting the market?
Been around a long time. Having this flex mortgage, which is proprietary to Guild, we have had that for now about 3 years. So it's been in the reverse mortgage product has been around for a long time. That product has been refined and refined and refined. I think it's phenomenal. I've been doing it for almost 18 years. But this one with Guild is hands down so much better, so much more flexibility. And the other part that they love, my clients, when I say they, is that they can come to call us. This is a Guild mortgage product. We do not sell it. So when they say, hey, next month or next year, I got a question, you can still call us. We can help you find that information. So, and Brandon, do you want to talk about the line of credit option part of this? He's like, do I?
Yeah, sure. So one thing that is nice about it is you can take, with the line of credit, you can take a lump sum up front. And they don't allow you to take the whole thing out right up front. And they do that for your protection. But you can take a big chunk the first year, a little smaller chunk the second year. And then from that point on, you have a growth rate on your line of credit that you have access to every year. Mm-hmm. So it may start out at, for an example, if you're given a $300,000 line of credit, the first year you can take out approximately $200,000. The second year you'd be able to access an additional $100,000, and then each year after that you'd be, and again these are just ballpark numbers, but you'd start out maybe 22,000, and then the second year you'd have 24,000, and then and it would grow, grow annually.
And how do you access those funds? You just pick up the phone and say, "Hey, I want $100,000."
Mm-hmm.
A lot of paperwork. How does that work?
Easy. You just contact us and say, "Hey, ready? We have your wiring information on account, so we just wire into your account." You just call and say, hey, we want this money, and you flip it over there. So what that means, Brandon, is that this $350,000 loan, when we talk about people getting their stocks and bonds, and some of my friends have burned through it, this actually grows every year so that you can continue to take more money out. So in a sense, you could pay yourself another $2,000 or $3,000 a month for the rest of your life on top of the $350,000. And people say, well, how does that work? Yes, if you borrow more money, then the payoff becomes larger. But I asked the question, so if, it's a mentality your whole life of saving, 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 and planning, planning, planning. When does that stop? So if you're saving, 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 and planning, 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 what age is it that you start paying yourself back? And your house is usually, if it's not the largest, it's one of the largest assets that's part of someone's portfolio. And if they don't access anything there, they can't get that opportunity. So if you're just saving, 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 planning, planning, which is hard to change after 40 years of your life, but I always tell people, hey, it's your turn and your time to do what you want. And they're like, what do you mean? And I'm like, what do you want to do? I've never been asked that. And I'm like, what are you wanting to do? Well, I've always wanted to go on a trip to, and they fill in the blank. And I'm like, let's do it. Really? I'm like, it's your house. It's your money. Well, my house really needs some repairs. Like what? Well, it needs a new furnace, a new roof. Is there anything you want to do? Oh, I'd love a new kitchen. Then let's do it. Oh, but I don't know. What if something happens? Well, that's where we've arrived. We've arrived at that point. It's time to actually take advantage of where you're at, what you can do, and enjoy it. Now, let's talk about leaving it to the kids. Brandon, what's your thoughts on our wonderful parents and grandparents who are worried about leaving it for the kids?
Well, here's my thoughts. Are you, as a retired person, are you saving so that you can give your kids some money when you die, where that they can go on vacation and have a few days of fun with it? Or would you want to be able to give them that money while they're alive and be able to enjoy that vacation with them?
Yep.
And I think about that, from my mom. My dad's obviously passed away, but I would much rather be able to make sure I phrase this and I don't sound funny, but I would much rather enjoy their money together with them than be given a bunch after they're gone. And to me, that's one of the big things that this reverse can do, is it can give you that financial freedom to not only spend time with your family, but enjoy that time with them instead of being stressed all the time.
We call that legacy living, wherein rather than sitting on $1 million asset at your house and saying, well, I'm just nervous and scared that I don't want to have to go into debt, which again, by definition, debt is making payments, and this is not making payments. You can say, I'm going to access that equity and I'm going to enjoy life more with my children versus waiting for me to die, letting the kids take it. And I'm sorry, friends, I've seen it. I do a ton of these. They usually go buy a side-by-side, go on a big fancy trip, and they usually blow it. That's not everybody I know. Some don't. But it's like, is that what you planned on?
And if that is what you planned on, then
if that's yours, if that's what you wanted to do.
Fine. But guess what? They can do all that stuff with you.
That's the point.
If you do it while you're
still alive. It's called legacy living. Do it while you're alive. Enjoy it with them. Not just sit and worry and wonder with $1 million plus asset sitting there and wondering and hoping that it's okay and that you want to leave something for your kids. I say let's enjoy it with our kids. By the way, there'll still be something for them because the reverse mortgage never goes to the top side. There's 1,000 other things. Like I saw a slide regarding. So let's say you have $500,000 of stocks and bonds set for your retirement. They said if you just rely on the $500,000 and go through that first, and they used about a 15-year time frame, with the stock market having great days and then crashing and burning at times, and then going up and then going down and going up and going down, but you have to have a steady income. So you pay yourself no matter what. You pay yourself that $2,000, $3,000, $4,000, $5,000, $6,000 a month during the highs and the lows. It lasts approximately, I think it was 13 plus years, and you burn through your 500,000. If you actually get a reverse mortgage at the same time, and you take and access money from your stocks and bonds during the high times when you're basically getting the interest part, but in the tough times when the stock market's having a tough year or a month or whatever, you actually pull that income from your reverse mortgage. It actually took the 500,000 and made it more like 1.35 million, because that 500,000 remains whole. And then when the interest is accruing in your benefit, then you can actually let that money stay and earn the interest. So in a sense, the reverse mortgage can be used as a financial tool that you can preserve your stocks and bonds for a longer period of time, and you, quote, won't burn through it. It's cool stuff. The other part is, let's say, hey, I want to downsize my house. It's time to downsize my house. I like my house, it's good, but I want to downsize it. Well, you could sell your house. Again, let's use $1 million house. The new house is $750,000, let's just say. You take that $250,000 that you made and put it in your pocket. And between some of your equity and a reverse mortgage, you buy the other new house. So you can use it as a purchase transaction. You have no mortgage payments on it, and you now have an additional $250,000 in your bank account. And you're able to downsize into that new location that fits maybe more of your lifestyle now. The other part is, let's say you want to upsize or up locate, probably not upsize, but up location. Maybe you want a little bit nicer place, newer place. Well, I don't know. And you got a little old house that you've had for 50 years, and it needs a lot of repairs, and it's worth $600,000. And it's paid for. You sell that for $600,000. I can give you another, let's say, $350,000. You're now buying almost $1 million home with no mortgage payment. So it's this tool that literally can fit. I've seen every circumstance. Maybe there's one that hasn't yet. But if someone is in a tough situation and needs to get out, they have a mortgage in their later years, we can pay that thing off. They need some income, we can do that. I want to downsize and have some cash. That works too. I want to go into a nicer location that costs more without a mortgage payment. That works. So this flex mortgage, this opportunity for someone to sit down and say, okay. And I will tell you, and I've learned this in watching my friends in politics. I've learned this with stuff. People rely too much on the phrase, well, I heard. Well, I heard that ... I heard someone say ... because they heard it on the radio, they saw it on the internet, they watched a thing. And again, we're prone to be more negative, but we're prone to look for that. We're prone to look for the problem. That's okay. But if you just stay there and that's where you find and do your research, you're stuck. And I'm going to tell you right now, if anybody is saying the reverse mortgage or the RFlex mortgage is a bad idea, I challenge you to do your homework. I challenge you, and challenge is a positive, by the way. I don't mean to be, like challenge you, but, I challenge the thought is more than anything. I challenge the thought that literally, let's come and get some true facts and see if it does fit. There's some people that say, not right now. I just checked with a client that I talked to a few months ago. And he's like, hey, I might need one, but not yet. I just checked. He's like, I like it, but I don't need it just yet. I'm still doing these other things. Great. Maybe it's not the right time, but you have that opportunity, that option. I have 3-4 this month that are saying, man, this is the best thing ever. Let's do it. Or I need it. Or, hey, I need to remodel my house and I need $300,000 or $400,000 to do it right. We can give them that money and then some, and they have their house the way they want it.
We know that Guild Mortgage is offering this. Do all banks and all credit unions offer this?
No. There are ones that do, but a bank and a credit union, my apologies to my friends who work there, is the worst place to go. Again, someone else might disagree, and that's fine. I'd love to have that conversation, but that's just a portal. That's just a fill in the box and see, and they put in the computer. When you come to Guild Mortgage, we sit and we consult and we talk through it and we plan accordingly. So there's no bigger need for a consultant to walk through this process and to prepare for the best and see all the opportunities than to come to, Guild Mortgage. No, by the way, we are the #1 reverse mortgage company. Now, we do everything. Don't think that's the only thing we do. Today it's the only thing we talk about, right? We're the best first-time home buyers too. We got some incredible construction product, but we have the top flex mortgage people in the country because of the products that we have and the way we consult and the way we coach. Because if you got a reverse mortgage and you don't understand it, it's like anything else. If you got the coolest, latest technology device, speaking to my friends who maybe that's a challenge, but you have no idea how to push the buttons or get it to do what it does. And I'm not saying this is any complicated thing, but it is a conversation. It is a consultation that's continual. But for example, the next year, hey, Tom, I ran into this situation. Should I use my reverse mortgage or should I not? How should I do this? And by the way, we also refinance them. If the market drops in rates and other variables, sometimes you can get more money. That's one time you really refinance it to get more money. I've done that a few times, specifically during the COVID years when rates went down to 2 or 3. I was able to give my clients more money with a lower payment. Made a lot of sense. So there's always that consultation, the conversation. So if someone says, well, I'll just go to my bank. In fact, just so you know, my client that we're closing here in the next week, he came and talked to me. For whatever reason, he felt more comfortable going to his bank. They denied him. He's back and we're closing his deal. They just don't, it's just a fill in the box, and put in a computer and see if it worked. We don't problem solve. We don't work through things.
How do they find out more?
Brandon?
Well, we're the Stone team at Guild Mortgage, so apply with stone.com, or better yet, give us a call, 435-654-9979, and we'll set up a time when you come in and sit down and consult with us face to face, because we'd always much rather sit down with you and talk to you, explain it,
especially this product.
Explain it with you, across the desk from us.
One last question: are you doing this to make money?
Yes. Yeah, Guild Mortgage. This is a profitable thing for sure. This is a product, and again, whenever you get to be in a company that has enough of a portfolio with normal mortgages and stuff like that, you can start doing reverse mortgages, wherein they don't make money on reverse mortgage out of the gate, right? There is no monthly payment. They wait until that loan's paid off, right? But it's just like you and me when we have some income from our job, but we also put money into a 401k. That's the way a business works too. So this is actually money that will come in down the road for the company, but it's also a needed product. And our whole goal at Guild Mortgage is to make sure we can give a product for everybody in any situation.
Educate.
Get the truth. See what's really going on and see if it fits for you.
You have a phone number where they can reach you?
435-654-9979, but right here on Main Street next to the radio station, next to Trek Bikes and Fish Heads. If you want to just walk in and come see who's there, we invite you to walk in. And by the way, you got to come see our office anyway. 1929, that thing was built.
I'm impressed with the place that's next door to us.
Awesome.
The work that's going into that.
He just showed it to me. Shadeco and stuff. You go in there and it's like you go into a whole different world with the lighting and they put it so it's a house.
What an asset.
Yeah, it's going to be a real neat.
Really cool stuff. So, yep, people are investing in downtown.
That's good. Thank you very much.
Thanks, Bob.
Brandon.
Bob, thank you. Have a good day.
Have a safe